Hello, good morning. You're watching Buy Now Sell Now on ET Now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good morning to you as well. And today, what we're seeing in the markets recovered from the day's lowest point. But let's look at broader markets, right? Because that was something that was underperforming. Is that the story today, or is that a change?
If you look at the way how broader markets are performing, firstly, good morning to you, Vinny. And if you look at the way how the broader markets are performing today, in fact, we've seen a very smart recovery actually come by for the broader markets, especially the small cap index. As you can see it on your screen, at the day's highest point, is recovered over 2% from the day's low. If you look at how small cap index has performed, let's take a look at what mid cap index also is doing at this point in time, and if the trend over there also similar. Yes, it is recovered from the day's low, now at the day's highest point. And ditto coming in for the benchmark indices and Nifty Bank as well, because we've seen a sharp recovery from the day's lowest point when it comes to the Nifty as well as the Sensex and the Nifty Bank as well. Nifty Bank is now actually seeing a mild bit of outperformance when you compare it to the benchmark indices, hovering near the day's highest point for Nifty Bank as well. But advanced decline ratio for now is tilted or is skewed a bit towards the gainers. That's the reason, one of the reasons why you're seeing actually a recovery play out in the markets. Talking about the list of gainers and losers right now, BPCL is among the top gainers on the Nifty. Remember that there has been a block deal, a sizable block deal that took place in BPCL earlier this morning. So on back of that, you can see BPCL trading higher by 1.7%, Coal India trading higher by 1.5%, Adani Enterprises, Bajaj Auto, Axis Bank are the other set of gainers. While on the flip side is the IT index and the IT stocks that are taking it a bit easy, given the fact that we saw a sharp downtick in the Nasdaq also in the overnight trading session. So you have Tech Mahindra among the top losers. Along with that, you have Infosys also that's seeing downtick of about 2.2%. Cipla, Dr. Reddy, Sun Pharma are the other set of declines in today's trading session. So suffice to say, the defenses are taking a bit easy. IT and pharma both on the back foot in today's trading session, while you have the PSUs that are actually holding on to some sort of gains. And remember, you have Jeffrey's note also that's come on the PSUs, and it is a positive note. So you can see that reflection as well on the PSU counter. So that's the way how the markets are looking like at this point in time, Vinny. Yes, smart recovery coming in for the broader markets, in particular small cap index, to answer the question you posed.
Absolutely. But Cheryl, a lot of individual movers in trade also that you look at it today, and especially on the back of earnings when you're looking at it. We have MTAR Tech that's down and out in trade also on the back of its numbers. We have BLS E-Services, which was obviously the part of BLS International, which was separated and listed. That company too reported its numbers, so we have that in focus. BEL as well as RailTel, both these are in focus on the back of order wins that they've seen coming in as well. So yes, both these stocks today are seeing a bit of a gain there. BEL up almost 2% and RailTel too trading with the gains as well. But Info Edge is a stock that we're keeping an eye out on. The company reported their numbers yesterday as well. Let's bring on board Chintan Thakkar, whole-time director and CFO at Info Edge, joining in with us this morning. Mr. Thakkar, thank you so much for joining in with us this morning on ET Now. A trend that I want to talk about first is, AI is surely picking up pace. And because of AI, there are some bit of a reduction in terms of jobs, not required in terms of jobs, especially in the IT pack. Now, any indication that you're seeing in terms of IT hiring? Because that was a bit subdued even when we'd seen a few months back as well. So any pickup in IT hiring?
So we have been seeing kind of a decline in IT hiring for almost now little more than 4 quarters. But if you really see the JobSpeak index that we published, that the decline is at a receding rate, but nonetheless it is still a decline. And obviously there is a correction phase that's IT industry is going on. And if you recall the 4 or 6 quarters before that, there was a great boom in hiring and the attrition rates and pay scale and all that. So I think there is a correction phase that that IT industry is going through, and that's continuing. Although the rate at which it's kind of receding, declining, it's receding.
Right. Very good morning to you, Mr. Thakkar. This is Cheryl also joining in the conversation. That's what we spoke about, the IT space and the IT hiring. No doubt in the quarter gone by, you have indicated that the non-IT hiring has actually been pretty robust. But is that a robust trend continuing even now that we are in Q4, in the quarter four right now? And also, has the attrition levels come down even in the BFSI segment?
Yeah. So non-IT, again, non-IT is multiple sectors, and there are some pockets where it's still growing at a faster rate. There are some few sectors where it's not growing as fast as what it was, let's say, 2 quarters ago. But overall, non-IT portfolio seems to be growing. So that's kind of a positive news, but and that has been offsetting some of the decline in what we see it in the on the IT side.
Mr. Thakkar, let's talk about some bit of a spending in terms of on the marketing as well as investment in Jeevansathi as well as 99 acres. This is where, you have been already spending a lot more. Going forward also, do you plan to streamline this, or could we expect this current pace to continue?
No, actually, if you look at last 3 quarters numbers in marketing spend in both the brands that you talked about, the spend has kind of bit stabilized. So 99 acres, it's approximately about 25 crore a quarter, and in Jeevansathi it's about 15 crore a quarter. So we are seeing that there is a stability and steadiness in terms of the marketing spend. Of course, all depends on how much the competition also spends on that, but it's likely that this is getting more and more efficient. While on the top line we are seeing certain efficiencies, a certain economies of scale. And that's why if you overall see the other businesses like Jeevansathi, 99 acres, and even Shiksha, they all have kind of reduced their cash burn and increased their efficiency. And that's why despite moderate growth overall for the Info Edge, we have been able to an uptake in terms of operating cash, and we have been able to keep the margin in the same range.
Mr. Thakkar, actually taking a leap forward from there and talking about 99 acres, we've seen how great the buoyant the real estate market has been. It's been having a good run over the last 2 years or so. In that context, if you could explain how are the fundamentals shaping up for 99 acres?
So you are very right. I think that's certainly it's buoyant market, and we also have seen a growth in our billing of about approximately 25%. And quarter on quarter, it seems to be the rate seems to be increasing. So we are hopeful that Q4 would be even better than that. But let's see. But fundamentally, the prices of real estates have gone up. But despite that, the demand is keeping pace. The inventory levels, it seems that ready to move inventories, it seems to be coming down. So that's why there are newer launches are happening in the market. And this is across all cities. Although most of our business comes from top 8-9 cities. But we are seeing that this type of growth happening.
Mr. Thakkar, in terms of, could you give us some insight in terms of the renewals as well as in terms of pricing? How is that shaping up? Could you talk to us about that?
Yeah, in real estate as well, the renewal rate seems to be going up. As I said, that the market is buoyant, and obviously we are able to take certain price hike as well. So when we talk about the 25% growth, it includes both that there's an increase in number of customers, particularly these small brokers, seems to be kind of coming back in the market, and the resale as well as the new launches market seems to be pretty hot right now. So we are gaining from the new increase in brokers as well as the price. So both are contributing to our growth rates.
And then in terms of the margins, is there room for more improvement, or from the current levels, or do you think the current levels is something that you would sustain at?
Like I said earlier, that economies of scale seems to be sipping in, and if this boom continues, and if we are able to keep the marketing spend steady, and again the caveat is that it depends on how much the competition also react to it. But if this trend continues, then obviously there will be further efficiencies that will be coming. We might reach closer to the break-even points.
Right. Mr. Thakkar, lastly, let me ask you the most important question which everyone would want to hear about your investments on the VC side of the business. Are you actually happy with the performance of the companies, and also can one expect some monetization or dividends soon?
Well, we have always shown our confidence in both Zomato as well as Policybazaar. We have been the founding investor. We have been the largest shareholders in both. And we continue to support them. We have great belief in the entrepreneurship of both the companies. We still think that there's a lot more to come here. Of course, it's a board decision, and board reviews every quarter about what we should be doing. And if there's anything to announce, we will certainly come back.
All right, Mr. Thakkar, then all the best for the coming quarter as well as the year ahead. Thank you so much for joining us on ET Now to talk about the quarter gone by, as well as where you see the road ahead coming in for Info Edge. That was Mr. Chintan Thakkar, who's the whole-time director as well as the CFO of Info Edge. But on that note, viewers, we slip into a break on this edition of Buy Now Sell Now. When we come back, we will be back with our experts. We'll take all of your stock-related query. We have Kush Bora joining us, as well as we have Saurabh Jain. So viewers, don't go anywhere. Welcome back, viewers. You're watching Buy Now Sell Now on ET Now, and we have our experts today. We have Kush Bora as well as Saurabh Jain joining us on the show. Very good morning to you, Kush, as well as Saurabh. Thank you so much for waiting by patiently, actually, while we were talking to the management of Info Edge. But let's kickstart taking all of the stock-related queries, which has already started pouring in. And the first one is coming your way, Kush. This one is coming in from Guru, and he wants to know about Bandhan Bank. Can he look to buy Bandhan Bank right now?
Well, the short answer here would be to avoid, amongst the entire pack, this is one stock that's not really performed well, gone into a bit of an oversold territory, but still doesn't make a strong case to buy. So for me, Bandhan Bank would be an avoid.
Okay, Bandhan Bank is an avoid coming in from Kush, but let's move on and talk about the next query. And Saurabh, this one is for you. We have Sankar from Chennai, who has 200 shares of NHPC at a price of 70 rupees per share. For the long term, how is this one looking like? Should they continue to hold, or maybe it's now time to exit and book out their profits?
Hi, good morning. See, for the long term, we are quite positive on the energy side. I mean, the NHPC does have a long-term plans in which the company's plans to, do more projects, and many of the projects which are on the pipeline will come up upon the, will be operationalized in the next 1 year and 2 years. So the revenue stream is going to double. From the long-term perspective, we are still bullish. It's a hold from me.
This next query that I have is coming in from a viewer, Usha, who's writing to us from Bangalore. Taj GVK Kush wants to know about what sort of a target she can keep in mind for the period of 3 months. She's already holding 300 shares at a price of 305 rupees per share.
So the next levels that this stock could reach are 380 and then 395. However, one word of caution: the stock's actually gone into an overbought territory across multiple time frames. So a trailing stop loss of 345 is advisable. But as I said, 380 and 395 are the next two levels that she could look for on this stock.
Okay, we have Pradeep from Kolkata, who is a long-term investor. They have 2 shares. One is DV's Lab, 20 shares bought at a price of 3,686, while 100 shares of Man Aluminium, I believe, at a price of 85 rupees. Saurabh, what's the view on this for the long term? Should they continue to hold both these stocks?
It's difficult to take a call on the commodity side of the business. Man Aluminium, I think the business will be volatile in the nature, considering the fact that the movement is largely restricted to how the global economy is panning out. China is not doing well. With respect to the pharmaceutical sector, we are quite positive. I think DV's numbers were not that great this time around, but from the long-term perspective, the stock is good. It's a hold.
Saurabh, putting you in a fix with this query then. This one is coming from Raju. He's writing to us from Bangalore, and he wants to know if it's the right time to go ahead and invest in Paytm for long-term gains.
Don't think so. I think the business is now being challenged, and the RBI governor was quite categorical that they are not going to review their take on the Paytm. So I think the dynamics will go under a lot of change. I mean, you buy a business because of the growth it will see in the future, and now that growth and the business both are challenged. So there is no point in chipping in the company.
Really had a big smile when Paytm and the question was asked, but surely you can give in your view on Paytm as well. But there's one more query from Sangeeta on SJVN for you. Wants to know whether they can add more shares of SJVN. They're already holding 500 shares at a price of 151. So should they average out and add more, or what's your view on this?
Is that for me?
Yes, Kush.
Sure. Paytm, I think there is a consensus building around it, which is very clear avoid. So I fall in the same boat, for better or for worse. SJVN, my suggestion would be to add more. The stocks had, like we were discussing yesterday, also some of these names had seen quite a lot of froth building up. That's correcting, and if you see, even in a dullish market, this stock is actually now attempting a very clear recovery. So from my perspective, this is a positional hold. Not a bad idea to average out now if she had bought it at slightly higher rate. So for me, a positional target on this one is 135, and once that is taken out, we're looking at a target of 150 also. So SJVN is an accumulate, at the current level.
All right, accumulate SJVN for now is a call. Let me take this one. Is coming in from Imran. He's holding ABFRL at the price of around 209 rupees per share. He's saying the quarterly results are going to come today. But should he keep holding on to this counter or look to exit? What's your take on this, Saurabh? Fundamentally, ABFRL, does it merit to stay put with this particular counter? Because I know a lot of technical analysts also have given a buy recommendation for this particular counter over the years, actually.
See, the company is doing a great job. I mean, they are tying up with the global brands also. They are launching new verticals, new stores, and the growth opportunities. I mean, it looks that there will be a strong growth coming in. So I think from the long term perspective, it's a hold.
Okay, that's the view over there. But let's move on. And Kush, we have two queries. One is Bajaj Finserv, Tata Motors. Is it the right time to enter these two stocks for a medium to long term? That's the query that is coming from Sanjeev from Lucknow.
So Bajaj Finserv has seen a lot of selling pressure, across time frames. If you see, while this has been a wealth creator in the past, for now it just seems to have gone into a bit of consolidation mode and with a negative bias. It's testing the 200-day moving average as well. So my suggestion would be to just wait on this one. If it is able to rebound above 1600, then perhaps start accumulating. Otherwise, Bajaj Finance is a wait and watch from my perspective. Tata Motors, on the other hand, is a very different story. The stock had a stellar run. Everything that we are seeing now over the past 5-7 days is just some sort of profit booking, after reaching the overheating territories. Tata Motors is one stock, that she can start accumulating, or rather he can start accumulating at these levels. 1,000 seems like a very convincing, medium-term target for this. Once that is taken out, we're looking at 1080 kind of levels also. So Tata Motors is a buy and Bajaj Finserv is a wait and watch.
All right, this one's come from Ramesh. He's from writing to us from Hyderabad. Saurabh, he's a long-term investor. He has 50 shares of Syrma SGS, which he's purchased at a price of 507 rupees per share. Wants to know, makes sense to average right now, Syrma SGS, Saurabh?
I think the numbers were good this time around. The company is in the right domain. So I think it makes sense to add more. I think you can add surely more for the long term perspective.
Kush, we have Arvind Reddy from Hyderabad who has 200 shares of Star Cement at a price of 141. What should they do with this? Should they look to book profits or maybe add some more?
Vinny, my suggestion would be neither. I mean, don't look to book profits. Don't look to add some more either. Just ride the wave, for the moment. The cement pack has been doing well, and this has been one of the strong performers, for sure. And the blessing is that, he's bought it at 141 kind of rates. The stock is still higher, way higher above his buying price. So keep a trailing stop loss at 185 and hold on to this one. The stock is in a structural uptrend and should continue to, move higher. 220 and then 235 are the two levels that he should watch for. But don't add any further. It's already seen a bit of a run up, so it could get into a bit of a consolidation mode.
This one's coming from Srini, and though we've got Kush's view coming in for SJVN, but Srini wants to know that is SJVN and NHPC a good buy right now for the longer term, and can one expect further upside in these counters? What's your take coming in on this, Saurabh? And especially on an entirely, if you could even talk about the PSU sector as a whole, given the fact that we've seen a sharp correction after the rise coming in for the PSU sectors, but now you have brokerages coming in and backing it as well. So you've seen some bounce back in some of these names. What's your take coming in the PSU as a whole? And SJVN, NHPC, do you think it makes sense?
The PSU as a basket has performed really well in the last 8-10 months. The stocks have been, flying high. There is a good enthusiasm, and a flurry of money is coming in these stocks. The valuations are on the higher side. I mean, we haven't seen PSUs. Usually, PSU have always traded to the discount on their from their private counterparts. But now I think they are marching up quite high. Now the thing is that the earnings has to match up with the expectation. In some cases, in the December earnings, we have seen that the earnings have it did not met the expectations, and there I think the corrections may get deeper. But for the sectors like energy, utilities, specifically NHPC, SJVN, I think these companies can really do wonder in the next 2-3 years. I mean, they have signed up a lot of contract, lot of capacity is building up, and it will come on the operation side in the next 1-2 years. So I think from the long-term perspective, it makes sense to chip in the NHPC, SJVN kind of stocks. But But as you are going for the long term, I think it is prudent. It would be prudent to buy in a staggered manner. I think market corrections will give you good opportunities.
Okay, that's the view coming in on SJVN and NHPC. But on that note, viewers, we're going to slip into a very short break. Don't go anywhere because we will be continuing with your stock-related queries after the break as well. Welcome back, and you're watching Buy Now Sell Now on ET Now, a show where we solve all your stock related queries, and we have our experts for today, Kush as well as Saurabh, both on the show as well. The next query, Saurabh, this one is for you, and this one is on Gujarat Pipavav. We have Bisakha from Kolkata who's holding 50 shares at a price of 92 rupees per share. What should they do with this? Should they continue to hold or maybe book some profits now?
Prudent to book some profit because a lot of volatility is there in the market. So I think not the favorite sector of mine. I mean, I'll recommend to book partial profit.
All right. This one is coming in from a viewer who wants to know about LIC Housing. 200 shares bought at a price of 590 rupees per share last month alone. Kush, what price should the viewer keep in mind to get out of this particular counter? His views for the short term. His name is Ravi.
So for Ravi, the suggestion would be to clearly hold on to this one. Again, it picked up a little late in the entire pack, but it's done quite well. And the days when it was higher, we've seen very high delivery markup. So it's back on, it's up on back of very strong volumes. The target that I would have, for this stock would be the recent high that it touched. So close to 665, 670 are the zones that we're looking at. I'm assuming this is a positional bet that he's taken. And on the downside, have a very clear stop loss at 605.
Okay, let's move on to the next stock that we are going to talk about. And this stock query is from CG from Karnataka. They want to know on Uno Minda. They have bought it at 667. What's the view on this, Saurabh?
Optimistic about their future plan. They have come up with the newer lines, newer products to serve their OEMs, and their product basket is increasing. And there's the size of their products in a unit is also increasing. The company, the management has given a good guidance, optimistic guidance about their future plans and the growth they are going to see. So in that sense, it's a hold.
All right. The next query is coming in from V. Murli, and he wants your views, Saurabh, on this query. One, he wants to know whether he can buy Prestige Estates right now, given the fact that we are in midst of the real estate boom and the stock has already hit a 52-week high. So does it make sense at this elevated level to enter Prestige Estates? And the other one, it wants to know about Supreme Industries or Alchem. Which one of these counters makes sense to invest right now?
I think real estate is doing pretty well, and premium side of the market is doing pretty well. And Prestige is, they are offering both premium segment and the mid-income segment also. And the company has done extremely well. The valuations are on the higher side. I think it would be prudent to take a view for the long term and buy the stock in a staggered manner. With respect to the two stocks that you have asked, I think Alchem has shown very good set of numbers. They have improved their margins, and there is a good amount of growth coming in their vitamins and other segment. So I think Alchem can be a good buy.
Okay, let's move on and take the next query. This one is from Satya, and this one is for you, Kush, and this one is on RFC. What is the strategy there? Their price is 170 rupees. So what should they be doing with that? And the other one is CESC as well as Traxin. What's the view on that as well? What should they be looking between CESC and Traxin?
So CESC, again, one of the late
CF is the stock.
bloomers. Yeah. CESC, one of the late bloomers in the in the entire power pack, and has been doing well. I think after a bit of consolidation and profit booking, this stock is again on the way up. So I think CESC is something that can be held on to. It's close to the support zone. So I think 135 and then 139 are the levels to look for on the upside. Traxin, if I've been tracking it for a while now. gone into a bit of a consolidation mode. Not a bad idea to perhaps book some profits on this one. So Traxon and CESC, that's the view. I think the first stock that you mentioned was REC. If that's the one, then I think the stock is in a bit of a bull run. Only corrected in the in the recent PSU profit booking phase. Otherwise, I think it's that the upper levels are very much intact. I'll have my stop loss close to about 455 levels and hold this one for targets of 500, and once that is taken out, about 520.
Kush, the stock was RCF. RCF. The first one was RCF, which they have a price of 170 rupees.
Okay, so on RCF, I think the advice would be to perhaps book out. Yeah, I know it's in a bit of a loss now, but it's best to book out because the stock is approaching the 200-day moving average. It's coming close to the oversold territories, and the support zones are also a little far off. So I think it's best to perhaps book out less TC levels of 120 and 125 also. So perhaps exit is a good strategy on this one right now.
You've spoken about chemical stock and fertilizer stock, but we have Vivek who wants to know two chemical counters where he can do monthly SIP, and he's actually asked your view, Kush.
We're talking about picks from the chemical space, is it?
Yes, for chemical space, yes.
So, this is a bit of a conundrum because, this sector was poised to, rally start of this year, but somehow it's not translated into, numbers or price performance just yet. But a couple of stocks that I have on my radar from this space, Deepak Nitrite is one stock that is consolidating. This is one good stock to have, in your portfolio from an SIP, perspective for sure. I think 2,500 is the first target that I'll look for, and once that is taken out, we're looking at 2,750 also. The other stock, obviously, is one of the big boys, the SRF. This too has been a wealth creator over a while. So again, consolidation mode aside, on the upside, this stock could very well reach 2,550, and once that is taken out, 2,700 kind of levels. So these are the two picks. Although my suggestion would be keep your allocations a little limited. Let price movement start, kicking in, and then you can, bump up your allocation.
Let's move on. And Saurabh, the next query is from Elias from Dubai. They're holding 73 shares of Berger Paints at a price of 660 rupees. What should their view be on this one for the mid to long term? Should they continue to hold or maybe look to average it out right now? What's your view?
I think the company is putting up a good show. They are coming with the newer products and the margins are improving. The sales are also improving. The kind of activity we are seeing in the real estate is actually giving new growth to the paint companies. So the view is bullish, and you can buy more on declines.
All right, Saurabh, another one coming to you, and we don't have the viewer's name written, but the viewer wants to know the future of IREDA, IREDA. The shares bought at the levels of 214 rupees per share. What's your take on this one? What's the future looking like for this particular counter? Locked in the lower circuit of 5% today as well.
See, the outlook is quite positive. I mean, they are financing all the green energy development going in the country, but the price is not that good. I mean, it's absurdly high on the high valuation. The government came out with the issue at a 30 rupees, stock open at 50, 60 rupees, and now gone to 200. It's a euphoria which has taken this stock to that level. I think justifying 200 levels will take the company to perform for the next 2-3 years by giving a very good growth numbers. So I would recommend you to average it out, stick with it, but you have to stick with the stock for the very long.
Kush, we have next query coming in from Mr. Thomas from Kerala. They are holding 500 shares of Restaurant Brands Asia at a price of 114 rupees per share. Should they continue to hold this for a period of 3 months or maybe look to exit now?
Well, I think it's a good idea to exit. The stock's actually broken the support level of, 110. That's a strong support zone for the stock. It's broken and it's not performed for a while. It's best that, he exit. Once the stock picks up steam again, we can consider. But for now, it's a good idea to exit out of this.
All right, Kush, this one is coming from Ashok. He's holding Nifty April expiry futures, one lot at 22,337. What's the target to expect for that one? And also one lot of ITC at 476, that's March expiry.
So for Nifty, I think it's not a bad idea to hold. We are looking at a positional target of 22,200 and then 22,500. even by the end of April, there's a very good possibility that the Nifty could rebound and hit those levels. And I'm talking spot levels. So then that could translate into the future level depending on the premium. But again, 22,200 and 22,500 are the levels that we can look into. Now, as far as ITC goes, I think yesterday we had a detailed discussion that how there's a consensus building that it's a screaming buy now. So that we still maintain that view. From a cash market perspective, I think the levels that we should look for 430 as the first target, and once that is taken out, we're looking at 445 as the second target. So given the kind of buying that ITC could see in the coming days, that's also a very clear hold.
Saurabh, this next query is from Subrata Mukherjee from Kolkata, and they want to know on HDFC Bank, is it the right time to start averaging out HDFC Bank for the long term now?
I think it will be a contrarian call only because market is not liking the numbers after the merger with the HDFC. I think it will take 6 months to see how the high cost of deposits which have come to the balance sheet after the merger will get reduced with the low cost of deposit, and gradually I think we'll see some kind of sanity and the buying start coming in. I think it will take, in my opinion, it will take approximately 2-3 quarters for that to happen. As of now, it is a contrarian call only. I think if you want to chip in the banking sector, ICICI can be a good.
On that note, we'll actually slip into a break in this edition of Buy Now, Sell Now. When we come back, we'll continue taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's actually kickstart with the rapid fire with Kush as well as Saurabh. And the first one is coming in from a viewer who wants to know about Yes Bank holding 100 shares at a price of 12.95 rupees per share. Kush, time to add some more?
No, unfortunately not time to add some more, but for sure hold on to this one. 25 is a good stop loss to have, but don't add more.
Saurabh, this is a recently listed company, Park Hotel IPO. So the viewer Subramaniam had gotten the shares allotted in this. What is your view? Any view on this one?
Hotel space is doing pretty well. I think 2024 will be a good year. It's a very good brand. Hold from my side.
Okay, Swati has a couple of stocks where she wants to know the entry price, but IRFC and RailTel for a period of 3 years. What sort of an entry price should one look at, Kush?
I think the current price is a good space to start accumulating. Not a bad idea. 150 kind of zones are a good support zone. So IRFC 150, the current price is a good one. The second stock is RVNL, right? There too, I think the stock's seen a fair bit of correction, come down to support zones. So here also the stock is at a good entry price. So 245, 250 on RVNL is also a good entry price.
Kush, one more query. This one is from Rajiv from Mumbai. They have 100 shares of Latent View at a price of 450 rupees. Should they add more at the current levels for a time period of 6 months?
From a 6-month horizon, yes, the stock is actually now ready for the next leg of up move, which can take it to 550 plus kind of levels. So definitely add more is a good idea on Latent View.
Alright, Padma Silva Rao wants to know about Vare Renewable Company. Saurabh, the stock has been hitting lower circuit. The viewer is a bit perturbed about it. 1300 rupees is the buy price, 20 shares. What should he do with this particular counter? He's making good, healthy profits already.
I think better to exit whenever you get opportunity.
Kush, we have Subramanian from Chennai who has a query on Lemon Trees. They're holding at a price of 90 rupees, as well as Supradeep Engineering at a price of 286 rupees. Should they continue to hold this for a medium to short term?
Lemon Tree, yes. Hold on with a stop loss of 124. That's a good support zone. The stock can rebound from here. As far as Supradeep Engineering goes, a bit of a downturn close to the support zone. So here an exit perhaps could be a better strategy.
Alright, and with that we come to the end of the rapid fire. Thank you so much, Kush, as well as Saurabh, for joining us on the show and also resolving all of the stock related query. Thank you so much for joining us on today's edition. But let's put the spotlight then on the insurance pack and the entire insurance pack actually. The IRDAI has actually issued a draft rule for Bima Sugam, which aims to bring insurers, policyholders as well as intermediaries on a common digital platform. My colleague Anurag Shah is here with all those details. Anurag, tell us, what exactly does this particular platform entail?
Insurance regulator IRD has come up with much awaited draft exposure related to online marketplace Bima Sugam. So Bima Sugam platform would be a one-stop solution for all insurance needs, starting from buying an insurance policy, for surrendering an insurance policy, for claim settlement, for grievance redressal. Everything will be done through Bima Sugam platform. This digital platform will be a interlinkage between intermediaries, policyholders and insurance companies. So as per IRDA draft, Bima Sugam would be a completely non-profit company. The shareholders of Bima Sugam would be life insurance companies, health insurance companies and general insurance companies. There will be no majority shareholder of Bima Sugam. Capital would be given to Bima Sugam as and when required by insurance companies only. And as insurance regulator IRDA's chairman Debashish Panda has stated many times that Bima Sugam would be a UPI movement for insurance sector. So it's a very big development in insurance sector. Finally, after a long wait, insurance regulator IRD has come up with the exposure draft related to the online marketplace Bima Sugam.
Okay, Anurag, thank you so much for that. Surely keeping an eye out on the insurance back there. But with that, we're absolutely out of time in this edition of Buy Now, Sell Now on ET Now. It's a goodbye from Cheryl, myself, as well as the team who put this show together. Don't go anywhere. Markets at noon will take the action forward.